Hello and welcome to this Friday's morning market briefing. We've got lots to talk about, but firstly, ransomware attack on ICBC does disrupt trades in US Treasury market, as well as that Jerome Powell warns Fed against risk of being misled in the inflation fight, following a string of interesting economic data. As well as that, we've got lots to talk about on the charts, also with lots happening on the economic calendar. We'll come to that near the end, so make sure you stay around to see that. Before we get straight into it, make sure to subscribe. But the first article to talk about, of course, is the ransomware attack. Now, a ransomware attack on China's largest bank has disrupted the US Treasury's market, and this has forced clients of ICBC to reroute trades. Now, ICBC, they are, the industrial commercial bank of China, a key bank of China. And therefore, this ransomware attack is obviously very significant in shutting down their industry and shutting down, their flow of clients to making, those transactions run through. And therefore, this kind of ransomware attack will have great impacts, at least on the intraday on US markets, which are being traded by this specific bank, with the Securities Industry and Financial Markets Association breaking the news, with ransomware, paralyzing computer systems unless a payment is made. And this obviously is highly damaging to, banks in particular, due to the fact that they run on that fast-paced nature, where you're taking in, a client's information, what they want to buy, what they want to sell, and you're going to have to, enact that kind of that process of, that transaction as soon as that client says that, because in case you don't do that, the time to place that trade may already be gone. And therefore, this sort of ransomware attack is so key and so damaging to banks in specific, because they can't just, put their kind of workflow on hold, because, their entire business runs on this fast-paced nature, especially within the sales and trading division, of course. Now, the attack did prevent the ICBC from making treasury trades on behalf of clients, with market participants such as hedge funds being forced to reroute trades as a result. Now, the disruption on markets, however, is reported to be limited, with the ICBC already beginning to restore services of yesterday afternoon. So obviously, by going into next week, this should be a completely resolved issue, hopefully, and therefore, have very little effect long term on the Treasury markets, of course. With the Treasury Department spokesperson saying they're aware and monitoring the situation, with the ICBC not responding to the Financial Times request for comment, which is interesting to note, of course. Kind of having this lack of knowledge on how, a market, a big key bank leader is not how they're responding to the kind of issue at hand, is obviously very interesting and very important to know, to kind of understand where whereabouts the market might be going into next week and today's trading day within the US Treasury markets. Now, ransomware attacks have proliferated since the pandemic as a result of remote working, as a result leaving more businesses open and vulnerable to cyber criminal groups, which could, obviously create more of these attacks as well, which is something that we have to keep on mind. With the Magic Circle law firm, Allen and Overy, reporting being hit by a ransomware attack on its servers yesterday as well. So this is some very important news to take note of going into, trading any treasury securities today, as this may still be affecting markets going into today's trading day. So definitely keep your eyes on this article as the story does develop. But next to talk about, of course, is Jerome Powell and his warning against the Fed. Now, Jerome Powell warned the Fed against the risk of being misled by good data on prices. Now, this is something that we've been seeing following, the recent inflation data release from, the US, and the most recent Fed interest rate decision, where rates were held where they were. Now, this was obviously following kind of a string of stronger economic data. So it was kind of surprising to hear that more dovish tone from the Fed in holding interest rates. But at the same time, almost the Fed perfectly predicted it, because with that came a string of weaker economic data and lower levels of inflation than expected. But here we are seeing, Jerome Powell warn against this kind of mentality of just simply believing that, inflation was, on their way down now just because of this one piece of data. This is what we've been hearing from many central bank officials, such as, the ECB President Lagarde or even Andrew Bailey from the Bank of England. Whenever we do get these kind of bright spots of economic data in reference to monetary policy, it is clear that these central bank leaders, with their experience and their time working within this industry, make it clear that, we can't jump to conclusions on these matters, and we do kind of just have to hold off sometimes and wait until, we have more information to decide whether inflation is actually coming down at the moment. With his speech, and he did reiterate the mission, to return inflation to that 2% target. With his speech to the IMF yesterday, making clear that Fed officials were gratified by the retreat in price pressures, but wanted to make clear that that was by no means an all clear, and following up by saying, if it becomes appropriate to tighten policy further, we will not hesitate to do so. With the Fed continuing to move carefully in order to address the risk of being misled, as this is a great risk, obviously, because if monetary policy is kind of misled down the road of believing that inflation is, not as significant of an issue as it once was, and therefore rates start to be brought down. It only takes a few contrary kind of data releases to then come out following that, to where the Fed or the Bank of England or the ECB could get caught in their tracks and basically mess up that whole monetary policy cycle. So it does seem that they're looking to kind of hold off and wait for more data to come out. Now, this obviously all follows the Fed's last meeting, where interest rates were held still, and that's where rates were kept at that kind of 5.25% to 5.5% mark. Powell also commented on the recent strong economic growth data, saying the data's been remarkable, and the resilience of the US economy has been remarkable. And this has been something that the world has been noticing, with the US seemingly being that bright spot in the global economy coming out of COVID, and the issues of inflation following that. The US economy has somehow held up very well during the times of high borrowing rates, with that kind of strong level of economic growth still being there, with US stocks and bonds, extending their losses, with the S&P 500 down 0.6% on the day. Sorry, pardon me. With the 30-year yield up up by 0.13%, reaching that 4.8% level, and the 10-year yield going up by 0.11%, all the way to the level of 4.62%. Now, following Powell's comments, the Fed was not confident that rates were sufficient yet. And Powell also said that the Fed would not ignore a significant tightening of financial conditions that may come with higher government bond yields. As we know, these higher levels of government bond yields do end up tightening market conditions, as they do act as higher interest rates really would. Now, Powell also said that the Fed would not ignore, I've already said that, and still traders in federal funds futures markets broadly expect the policy rate has peaked, with the debate shifting to when the central bank will begin to cut rates now. But that's all to talk about in reference to the charts. In reference to the articles, keep your eyes on this, as anything to do with Jerome Powell and the Fed has great impact on the dollar and any US affiliated market. So definitely keep your eyes on this. But next to talk about, of course, is the charts, with firstly to talk about US indices. Now, US indices do seem to tumble over, specifically the US 30, which has now tumbled over from this high area of liquidity that we noted. So this general liquidity and resistance that we had noted has seemingly acted as a strong sell-off position for US indices, with price pushing its way into that area before now seemingly selling off. It is interesting to see how price did react with this bearish trend line, which we had highlighted 2 times over now. Reacted to that area and then broke those most recent lows of the market, which were made on Tuesday of this week, and now it's pushing down further to the downside. So we can't focus in on what may happen today within the markets as well. We also should look to next week. So it's important to kind of look at this price action in reference to what might then come in next week's trading week. We obviously do have this area of liquidity, so it'll be interesting to see whether we can make our way down to that in today's trading session. So definitely keep your eyes on that. Next to talk about though is the dollar. Now, we have spoken about how this 38.2% Fibonacci area was seemingly acting as a strong area of resistance, but seemingly following the Jerome Powell's rhetoric today around rates, the Fed not being too keen on cutting rates too soon, or they're kind of being more hesitant in the way that they're looking at the most recent economic data. This has kind of provided a more hawkish tone for the markets, which as a result has pushed dollar higher, now breaking those intraday highs on Wednesday and pushing now and nearing this 50% Fibonacci mark. Arguably, it's already tapped into that, so it'd be interesting to see how it reacts to that. But now we have broken above this strong area of resistance that had been made on that 38.2% Fibonacci area. It'll be interesting to see whether we can start moving up to the the upside now, because we were kind of talking about we're struggling to find a trend on the dollar really at the moment. So we had obviously this long-term bullish uptrend. Then, we started to have a bearish downtrend, as you can see with this, kind of bearish trend line. Then we started to see, a trend to the upside once again. But then we were starting to notice that really we're just forming a range. But then once we broke below this entire range once again, we kind of thought, oh, well, maybe we're now on the bearish downturn. But seemingly we're not. And we've once again returned within this overall range, which you can kind of see here. So definitely keep your eyes on this as the story does develop. But next talk about is Euro USD, which is in an interesting position since following the dollars push to the upside on Thursday, we have also seen kind of Euro USD to pull back once more into this area of liquidity and touch that 38.2% Fibonacci area once again. Obviously, this is a strong area of liquidity, strong area of support. So the question is, will price now push away and once again to the upside from this area? That said, we have now kind of tapped this area 2 times. So, arguably, we aren't finding the liquidity we need from that area to get that bullish momentum to the upside. But obviously, with the ECB's president, Lagarde speaking today, this will highly influence the way Euro USD moves in today's trading session, with obviously the kind of monthly or dual monthly kind of trend for Euro USD being one of a bullish uptrend. But in the overall scheme of things, we have been on the downtrend. So definitely keep your eyes on this, as Euro USD is in a very interesting position whilst it's retapping this once again this strong area of liquidity. Next to talk about though is pound yen, which we've talked too many times now about this trend line. which has acted as bullish support once before and then kind of acted as an area of resistance as the pound tried to break once again more to the upside. Now we're seemingly above it. Now we're retesting it, and we did come into contact with that 38.2% Fibonacci area, which was in line with this trend line. Therefore, we kind of took this as a strong bullish position, and we saw, that bullish movement to the upside from it. However, we were unable to break, the prior highs of 185.971 yesterday. So it'll be interesting to see how, pound yen now plays out. Possibly we're just going to sit in a range until some economic data comes out, which is significant enough. But it is interesting to see how this is kind of a double top that's now formed up here. And so definitely keep your eyes on this as it does start to range. Next to talk about though is USD JPY, which is looking very, very bullish after obviously coming into contact with this 78.6% Fibonacci level on Friday of last week. And now we are seeing that kind of bullish momentum. So the real question here is, will we kind of see a sell-off reaching this prior high, which we saw after a great deal of volatility, or will we break above that and move on the way to that Fibonacci extension level of minus 27.2? So this is the key area to talk about and key area to keep your eye on. Definitely follow your USD JPY as we are in a very volatile kind of period on USD JPY with lots of volatile movements. So definitely keep your eyes on this. Next to talk about though is Bitcoin, which we were talking about this asset kind of having a lack of momentum, liquidity, and even predicting a potential move to the downside, a bearish move to the downside. And yesterday we saw price move up into this level above this strong area of resistance around the 35,000 mark. And in yesterday's session we have seemingly found that bullish support after retapping this area of liquidity, and we've pushed significantly to the upside, nearly reaching that 38,000 mark, which is very significant, of course. But from there we have sold off, and now we're sitting, and it almost did retest that 36,000 mark. So the real question is now, where can price really go? Is it now ready to go to the upside even further? Or have we even more, overextended ourselves? After all, the increased levels of Bitcoin ETF speculation did cause Bitcoin to rise dramatically into this kind of range and upward trend. And now that we've broken further above it, the question is, how far can we go? Or will we now see just a return to this range? So definitely keep your eyes on this. Next to talk about though is gold, which, following the Fed's kind of rhetoric today as a result of Jerome Powell's speech, we did kind of see a push once more to the upside on gold. That said, this really isn't something that's highly influenced at the moment by the Fed, largely due to the overwhelming pressure from the geopolitical issues, which is having the most effect on gold. So the issues, especially within Israel and Gaza right now, did cause this great push to the upside. And today we've seen once more a bit of a push to the upside after reaching this area of liquidity that we had noted. It did kind of break below it, but from there it did, take a move to the upside. So it'll be interesting to see now where it will go. We don't have too much to say about it, but it will be interesting to see that whether if it does reach this 38.2% Fibonacci area either today or next week, whether we will then see that final bullish push as it reaches a strong area of bullish liquidity and support. But that's all to talk about on the charts really. Lastly to talk about, of course, is the economic calendar with quite a bit of data coming out today. So firstly, we do have the RBA's monetary policy statement, as well as that we do have UK GDP figures, and as well as that their balance of trade figure, as well as that we do have even more UK data. So we do have the UK's manufacturing and industrial production data. That is very important to understanding how the UK economy is doing. So not only are we getting those GDP figures, but we're also getting that manufacturing and industrial production data, as well as that we are getting the new yuan loans as well as Italian industrial production and Spanish consumer confidence data. As well as that, we do have the ECB President Lagarde's speech, along with 2 Fed officials' speeches, and finally we do have the US's consumer confidence figure coming out. So lots of data coming out today. We've covered a lot on the charts, also with lots happening, and we've covered a lot with the articles as well. But yeah, I hope you have a great trading day. Enjoy this weekend, once you're done with the trading day. But yeah, that's all from us at Wildwood Capital. Have a great one. See you later. Goodbye.